Good morning, my name is Brian Johnson. Today I'd like to talk about, after the first lesson, regarding correlation, hedging, multi-currency trading. First of all, I would like to introduce you to my theory of hedges and natural trading. And as a brief explanation, the euro, US dollar, the Great British Pound, US dollar, 3-1. The anchor is Euro, Great British Pound. Euro JPY, Great British Pound, anchor JPY. But see how the anchor is tied in with and the Euro, Great British Pound is tied in with the two groups, and the JPY is tied in with the JPY group, the US dollar JPY. And I give you some examples of single correlation currencies, and here we have the Australian dollar, the US dollar, the Australian dollar JPY. The US dollar JPY is the anchor for these two. There is, when the Australian dollar is up, usually sometimes the JPY is down, because the US dollar JPY is down. So these are just some brief ones that I had included in the thing. You can try them and test them yourself. I downloaded the paper on the Forex Factory, Brian John's advanced method. So we're going back and looking once again at the correlation. It is quite simple to see in the correlation the AUD JPY is going down, the Australian dollar is going down, and the US dollar JPY is moving up. But the basket of currencies, these are in the 15-minute time frames, and you remember the message I showed you yesterday. It ain't always necessarily so. So here is the basket currency, and you can clearly see the trend is strongly down. See how fast it's going down? But here is a clue. It is in relation to the JPY. The JPY is higher than the Australian dollar, so therefore there's a sell on the US dollar and pouring money in by Japan, buying up to balance their trade on the JPY. This trend will be quite strong, I think, for quite a while the Japanese government buy up and support the Japanese yen for trading. Okay, that is the reason that there is a huge swing down in the core basket. And now we want to look at using, as you saw in the correlation, the JPY is the correlation between the euro US dollar and the US dollar JPY. So we're going to go down and look straight in the demo, and as you remember yesterday I put the 4 demos on. It had a drawdown of about 33 that I said was pretty constant. Obviously the way you look at this is which one of these two. I put these 4 in, but let's look at the 2. Which one of these two is the strongest? It's the sell. So the US dollar JPY is in the sell mode. That is why I use these 4 balances. But let's look at the real story. As it is in a sell bias trend, let's count them. There is 1, 2, 3, 4, 5, 6, 7, 8 buys on. 3, 4, 5, 6, 7, 8, but sells is 1, 2, 3, 4, 5, 6, 7, 8, 9. We have one more sell than buy on, and isn't that surprising? It's the euro JPY. The reason that I did this is a demo account, is to show you, one, how you can use bias trading with your trading method. And let's look at it. on here in the 15-minute frame, it says the bias on there is now going long, but it hasn't crossed the 5. And we look at the core basket. The core basket is moving down. The JPY is moving up. This is not a buy trend until these three go in here. It crosses over there, and remember the lesson with the Fibonacci in the other day. It has not reached past that Fibonacci point, and we're going to look at that in some depth later. But the real reason this is in the H4, the price is below the close of the day, so the trend for the day is down. That's why it's important that you refer back until the daily trend gives you an indication of the real trend. So therefore, the US dollar JPY, the JPY group is stronger. It's a sell on the US dollar. We looked at the bias. It's one extra bias, and it's put on here just to sit and wait. This is not going to affect our drawdown. It's going to go up and down because the amount of currencies and thinking is a small percentage. Also, look here, the account was opened at $500,000, and the actual profit at the moment is $212, and the drawdown is a measly $70. So we're not particularly concerned on a trade here, and we wait for the profit loss ratio. This is just done as a demo to show you the general principle. Of course, I wouldn't have put it on quite like I did, but I want to drive home one point to you. You would always wait until this crosses over there, either way, up or down, before you make your decision to go into the trade. But first of all, your overall consideration is look at the H4. The trend for the day is down. Until those passes into 3, it is below today's close. Okay, it's a sell, but it may go into a buy, but we're looking for the turnaround from buy to sell, buy to sell. It is break past the fraction. It's gone past the bottom line on the 4-hour chart. If we put a Fibonacci in, it has not reached the Fibonacci, and to say if we drop the Fibonacci on here, we have not reached the point of 23.6 to consider a buy market for today. Okay, that's just quickly giving you some ideas on how to use bias trend, use the trend, and bias the trade. These three will often give you, that could be long. The Australian, this is a good hedge. The Australian dollar could be long. The JPY could be long. The US dollar JPY could be short. Anytime any of these two go into the same profit, you can take and liquidate profit off the table. And once again, this is another way of making money trading using the odds that there's either 3, you made a mistake 3 ways, or it will bounce back and you'll have 1 in profit, 2 in loss, 2 in profit, 1 in loss, or all 3 in profit is the maximum profit you can take. I hope that clears up some things on bias trend trading. If you notice here that I'm only loaded all this up for a demo to show you what to do in trading. You can just sit here and wait till this one goes into profit based on the daily range, the hourly 4 range. The price is above the close of the day, and just wait for it to go from loss to profit to loss. It's a simple formula. You obviously may not may use this table as a platform, demo platform, as your thing. The reason I use 4 buys, 4 sells is simply that I can see quite clearly myself how the trades are running by in fast time, as you remember watching here as the volatility of the trade. This trade was put on just based on the daily to show you the difference in bias. Obviously you'd use the method I showed you in the beginning to look at the trade, compare your hourly, 4 hourly, look at the lowest low or the highest high of the range. I made this video very quick for you to give you an idea how to use correlation trading, how to use the trend, how to use the circle of loss, profit, loss. How to put that trade on was done in the first video the other day to be more accurate. But once again, when they're all in 4 buys, 4 sells, if you can't do 4 buys, 4 sells, you can simply do a simple hedge using the 3. The buy of the Australian dollar, the buy of the JPY Australian dollar, and a buy of the US dollar JPY. As brokers in America are unlucky to do a 3-way hedge, do the hedge of the same currency, there's no reason you can't use the 3 and just look at the profit of the US JPY. Is it plus or minus? If it goes into minus, you know the trend change is on, the JPY is stronger. If it goes into plus, you know the plus on the JPY is stronger. That's all for now, but remember, in relation, the account was opened at 5,000. It's currently running at 5,139, taking off the 73 drawdown. Once again, the sales of 212 exceeded the stock. You like to always have a 2-to-1 ratio of sales to drawdown, which is our stock, which is a long way off. Drawdown, I consider that very small. If this was a live account, I wouldn't worry at all. Okay, bye for now from Brian. God bless you. Incidentally, at any one time, because you put a sell on here, you can liquidate any position you want, but as long as your bias is the same in the buys and sells. But that's an advanced course. I'll leave it to you now to think about some of the things we mentioned. Correlations. This is a 3 Australian dollar correlation that I wrote there. There are other correlations. For the best correlation, I like the 6, which is 3.1 and 3.4 in the dashboard. Bye for now. God bless from Brian.